Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CH Modern D interim report. China Modern Dairy Holdings Limited offers a diverse range of businesses and services, including dairy farming, raw milk production, and trading of feeds, e-commerce platforms, forage, grass planting, breeding of dairy cows. The recent surge in China Modern Dairy Holdings Limited (SCH Modern D) stock price can be attributed to several key factors. Positive brokerage ratings and outlook from Pacific Securities and DBS have contributed significantly, as they anticipate a reversal of the raw milk cycle and promising future performance for the company. Additionally, the optimization of its herd structure has provided cost advantages, while leadership changes, including the appointment of Chen Yi as chairman, have signaled new strategic directions. These developments have collectively led to a 69.33% increase in stock price over the past year, reflecting market recognition of the company's strong rally and potential for future growth. The primary drivers of revenue growth or decline in a company's financial performance can be attributed to several key factors. On one hand, the raw milk business has been a significant contributor to revenue growth, driven by increases in total yield and unit yield, as well as a 10.3% year-over-year (YoY) increase in sales volume. On the other hand, integrated dairy farming solutions have been a major driver of revenue decline, with a 36.5% decrease in sales revenue and a YoY decline of 23.2%. Additionally, the average selling price (ASP) of raw milk has decreased by 10.1% YoY to RMB 3.29/kg, further contributing to revenue decline. The company's feeds and farm supplies revenue have also declined by 23%, while breeding products and platform services revenue have seen a significant drop of 46.7%. These factors highlight the importance of managing key business segments and pricing strategies to mitigate revenue decline and drive growth. The net income and profit margins of the company underwent significant changes in recent years. The integrated dairy farming solutions business experienced a substantial decline in net income, decreasing by 20.9% year-over-year due to a reduction in sales scale. In contrast, the raw milk business saw no change in its net income. Profit margins also took a hit across both businesses. The gross profit margin of the raw milk business decreased slightly from 30.3% to 30.2%. However, the integrated dairy farming solutions business suffered a more significant decline, with its gross profit margin dropping from 10% to 7.3%. These changes indicate that the company is facing challenges in maintaining profitability, particularly in its integrated dairy farming solutions business. The company is indeed generating positive operating cash flow, as evident from the financial summary and supporting data on pages 4 and 51 of the report. The net cash from operating activities has increased by a significant 23.3% in 2025 compared to the previous year, indicating a substantial improvement in the company's ability to generate cash from its core operations. This trend suggests that the company is financially stable and capable of meeting its obligations, which is a positive sign for investors and stakeholders. The company's debt level and interest expenses have undergone significant changes over the past year. While some sections of the financial summary suggest a decrease in debt levels, others indicate an increase. Specifically, total interest-bearing borrowings increased by 17.3% to RMB 16,971.7 million, while non-current liabilities, bank borrowings saw a 20% increase from RMB 6,888,188 to RMB 8,396,648. In terms of interest expenses, there is a clear trend of increase. Interest expenses have risen by 21.9% year-over-year, YoY, to RMB 143.8 million, with interest paid increasing by 22% from RMB 133,259 to RMB 185,478. The total finance costs also increased by RMB 47,990, 19.6%. Overall, the data suggests that the company's debt level and interest expenses have changed significantly over the past year, with a notable increase in both areas. The company's financial performance varied across different segments and regions. The exports of whole milk powder saw a significant increase of 107.2% year-on-year in the first half of 2025, while the raw milk business segment achieved notable cost savings and strengthened its core competitiveness. In contrast, the domestic raw milk business struggled due to oversupply issues. The comprehensive dairy farming solution business also underperformed, although specific numbers were not provided. Furthermore, the comprehensive dairy segment reported a substantial loss of RMB 845,803 in 2025, compared to a relatively minor loss in 2024. On a regional level, China performed well, with Mengniu Dairy Company Limited achieving success. However, it is worth noting that the core business and new business expansion in breeding, farming techniques, and feed business also showed robust growth. Management's outlook on company strategy. The company will focus on optimizing its herd structure to boost milk production and efficiency. This is achieved through integrated dairy farming solutions. Management has also expressed caution in new investments, opting for strict control of capital expenditures instead. The company will monitor potential financial risks, including foreign exchange risk, but no significant investments are planned during the period. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. Over the years, it has consistently paid dividends, as indicated by multiple references in the financial summary. Additionally, the company has also engaged in share buyback activities, further demonstrating its commitment to returning value to its investors. Concerns about inventory buildup and supply chain disruption exist. There are indications that the dairy industry is facing challenges related to inventory buildup and supply chain disruptions. A decline in dairy cow inventory by 0.5% year-on-year, page 8, suggests a potential issue with supply chain management. Furthermore, a decrease in sales of raw milk and an increase in purchases of liquid milk and others, page 85, implies that there may be an accumulation of inventory or disruptions in the supply chain. These factors raise concerns about the industry's ability to manage its inventory and maintain a smooth supply chain. That concludes the financial summary for CH Modern D. Feel free to comment below, and I will be happy to answer them when possible.